Welcome to Biztech SME Show, where we feature information and companies as well as their solutions that help manage businesses better. Now, today's SME Show, we feature Funding Societies of Malaysia. Funding Societies is Southeast Asia's largest digital financing platform that connects SMEs with retail and institutional investors. Now, it is licensed in Singapore, Indonesia, Thailand, and is registered in Malaysia. Now, here to tell us more is Wong Kah Meng, the CEO and co-founder of Funding Societies Malaysia. Now, Kah Meng, welcome to the show.
Hi, thanks, Brian, for having me on here. Happy to be here and sort of answer any questions and share experiences over the past couple of years.
Yeah, so Kah Meng, you've been around for 5 years. Now, tell us about Funding Societies and what you do in a little bit more detail.
Yeah. So Funding Societies is a digital financing platform focusing on serving SMEs across the region. We started off in Singapore in 2015. We moved into Indonesia in 2016. In 2017, we launched in Malaysia. Recently, we also established our presence in Thailand after getting the necessary approvals. So in all the markets that we operate in, we are regulated by the respective authorities. So for example, in Malaysia, we are regulated by the Securities Commission of Malaysia. So myself personally, I oversee the entire P&L and the business for Funding Societies in Malaysia. Again, similar business model that we have in Malaysia, although there are nuances across the region, be it Singapore or Indonesia, Thailand, given that the SME landscape is fairly varied and heterogeneous across the markets in ASEAN. So by and large, the business model is quite consistent, whereby we provide access to financing to SMEs that are underserved or unserved by the traditional financial institutions, and being able to do that by connecting with individual as well as institutional investors.
Okay, now give us an idea of some of the products and services you offer, because as we start to drill down on that, we will see where the gaps are in terms of what you are filling in the underserved markets, as you mentioned.
So maybe as a bit of context is that before starting off Funding Societies in Malaysia, I was basically advising some of the largest financial institutions across the region. And one of the areas that has been a big focus for large financial institutions is really on the SME market. And I think the reason is because there is a white space there that is currently underserved and or unserved. And it is because the SME market is neither as homogeneous as a retail consumer, neither are they as big ticket as a corporate customer. So you end up in this sort of in between, whereby they have very varied needs, they have very different nature of businesses, and hence the way that you want to approach them and provide them the financing solution that is needed needs to be somewhat tailored, and that increases the sort of cost to serve.
That's a big factor, isn't it? The cost to serve, because some traditional banks, the cost base just doesn't allow them to adequately serve or finance these segments.
Correct. So whether you underwrite a 1,000 ringgit loan or whether you underwrite a 10,000 ringgit or 100,000 or 1 million ringgit loan, the amount of effort that's required is very much the same, right? Obviously, you can innovate and things like that, but the cost of acquisition is by borrower and less related to the size of the ticket. So that's where a lot of the smaller micro enterprises companies becomes very challenging for existing banks to serve as a result.
And also that's where traditionally what their only recourse was basically to go to money lenders.
So it could be relying on money lenders, family, friends. If they go to a bank, maybe on the consumer side, they can get personal loans, credit cards. So those are the more common existing approach before this whole new wave of fintech and lending came about.
So Kah Meng, you've got everything from microfinancing to business term financing, invoice financing, dealer financing, and micro credit lines as part of your offering. Can you kind of walk us through some of those and how SMEs use them?
Yeah. So I think our strategy for the region has been quite distinct from some of the larger, well-known big markets, US, UK, whereby the SME lenders have taken a sort of monoline product approach. So I think our approach for this part of the world has been more distinct, whereby we try to provide the broadest range of financing solutions to SMEs to cater for basically their diverse needs. So the slew of products that you mentioned there is really a reflection of how diverse the SME ecosystem is. So whether they are in the B2C space, whether they are in the B2B space, whether they are micro, small, and medium-sized companies, the needs, the financing needs are very different. And hence the financing propositions, whereby whether it's a term financing solution, whereby it's equal installment of principal interest on a monthly basis, which provides flexibility when it comes to the use of funds, versus if, let's say, if you have a very specific use case for the funds, if you want to buy inventory, if you want to sort of factor your receivables for cash payments in advance, so to minimize or to optimize for the interest and the financing costs. So the different financing propositions that we developed and deliver is meant to help to achieve those different financing purposes.
And I take it that then those are the solutions that I mentioned in Malaysia, but Indonesia has more customized solutions for them, and Singapore and Thailand customized for those particular markets as well.
Correct. So generally speaking, there are, I would say, probably three major categories, product categories of families, and then every country would have its own sort of sub families of products. So generally speaking, the three main categories would be things like a term financing structure, which is very much general working capital. You can use the funds to pay for marketing, pay salaries, expand your set of inventories that you carry and things like that. There is also the other option of, let's say, a payables financing. So this is specifically used to finance purchases. Let's say if you have a customer order and you need financing to kickstart and to deliver the order. And lastly is receivables financing, whereby if you have already delivered a good and service and you're waiting for payments from your customers, then that's where you can get the cash advance from the invoices itself. So these are the main three categories. And then every country in the region, and even in the country itself, there are sub-products. So for example, the dealer financing product is actually a sub-product of a payables financing product family, because it's essentially you're using the funds to buy used cars, which is your inventory, for example.
Yes.
Yeah. And likewise for microfinancing is basically a sub-product family of term finance. And credit line is basically a similar structure as, let's say, an overdraft facility. Right?
Okay, and in Malaysia, what is your customer base like, and who are your key customers in general?
So there are three different perspectives that we track again. So one is basically the industry that the SMEs operate in. We have a fairly diversified base across the different industry groups. The majority of them will fall within the wholesale and retail trade sector, around 40% of them. I think this sounds like a large number, but if you really dig into it, wholesale and retail traders are very different. The products or the goods and services that they carry and sell would also be very different within this category. So someone who is selling vegetables versus someone who's distributing cars, spare parts for cars, are all within the wholesale and retail trade sector, but they are very different in terms of their
the dynamics of each industry is very different.
Customers, yeah, correct. So 40% are in the wholesale and retail trade sector, but they're very heterogeneous within that category itself. Around 10% of them would be in things like manufacturing and construction, and then the rest of it would be around in other services type of industry groups. So that's from a industry segmentation perspective. From a size segment perspective, the majority of the customers that we serve are in a micro and small SME space. So these customers are the ones who would want financing from tens of thousands of ringgits to potentially hundreds of thousands of ringgit. So these are the micro, small, medium enterprises. We do have a handful of larger SMEs as well in the portfolio, but the majority of them would be micro and small SMEs. From a vintage perspective, majority of the customers would be younger vintage. I would say maybe within the up to 5 years age group. I would say probably around 50% of them. But there's also the other 50% who are above 5 years old, right? 5 to 10, 10 to 15 and onwards.
Okay, and what are your investor profiles like? Who's investing in these?
So we have two distinct groups of investors. One big distinct group that we started off with was basically individual investors. So this would be mostly professionals, that probably age between 30 and 40s. So this would be the majority of our individual retail investors. So they would invest mostly through our mobile app. So you can actually sign up and complete your whole registration process, put in your initial investments amount, make your investments, monitor your payments all through our mobile app. And that's the main mode of communication and interaction with our investor base. I think increasingly also we have been engaging with institutional investors. So I think one unique thing about Malaysia is basically, this started a couple of years ago when it was announced in the budget, whereby the Malaysian government would also be co-funding some of these SMEs on our platform, right? So it's really partnering with private individual investors and institutional investors to co-fund some of these SMEs on our platform. So the arrangement is whereby for every 4 ringgit that we raise from private individual and institutional investors, they will come with 1 ringgit themselves. And this is really to be able to sort of expand the pie and reach out to more SMEs.
And so has that really been an accelerator for you?
Yeah, that's certainly been a very positive development in terms of being able to serve more SMEs. I mean, just very simplistically speaking, you can now serve, instead of 100%, you can serve 125% more customers by that additional dollar coming from the government. I think the whole awareness and the education and the branding that comes with it as well, right? Being part of the national agenda actually helps us to build the credibility and the trust with the local SME community and the investor community itself as well.
And also coming now, you're at a stage where you're 5 years into this.
Yeah.
People, I think that the initial skepticism and concerns have largely gone away, because essentially when you're doing transactions, success builds upon success.
So we have a very high retention rate of our customers, be it whether it's the SMEs or investors that invest on our platform. So we have a very high, healthy retention rate. But I think there is still a larger education, awareness, and trust building piece that needs to be solved. So even when we work with partners, and when partners try to reach out and try to do some kind of survey analysis of their customer base, of how well they know about, say, funding societies, I think there's still a big chunk of them that do not know of us or have heard of us almost 5 years in, right? I think we've done well when it comes to sort of the more metropolitan areas, the more digital savvy, micro, small, newer enterprises. But when you start talking about the bigger population of SMEs in Malaysia, whereby they're more traditional, they've been around for maybe 1 or 2 decades, they might be still headed by the founder, and so on and so forth, then that's where I think the reach and awareness is not as strong. And that's a lot of things that we need to put in place in order to get to a level whereby we are viewed as credible or as an ideal financing proposition for SMEs compared to, say, financial institutions.
So Kah Meng, the pandemic impacted SMEs and continues to impact SMEs tremendously. How have you played a role then in providing alternative financing? Because essentially some of the traditional institutions became very, very tough in terms of their lending requirements.
Yeah. So I think the pandemic has certainly been a challenging period when it comes to trying to figure out what is the impact on SMEs. Because this is very different from, so we have credit teams, both in the country, regionally and whatnot, that has sort of gone through like economic cycles before. So they have seen like things go up and down and things like that, and SMEs that survive and don't survive, and those that thrive. So I think we have that experience, but I think for the COVID situation, I think it's very different, whereby SMEs are just not allowed to operate. So the very next day, you just say, you can't operate, you can't open your business. Then the question is for us, like, how are we able to sort of discern and sort of figure out which SMEs would which industries would do well, which one would struggle, and things like that. So I think that has been one of the big challenges that we had to face in 2020, especially with the whole MCO 1.0. But I think over the course of the 2020, we have been able to sort of develop a playbook to say, okay, these are the different industry groups and which of them which we feel would be most impacted to the least impacted. And hence then take that view and use that to enhance our credit assessment and due diligence processes. So I think for us is to refine and to enhance our sort of risk assessment due diligence with the understanding of basically new verticals and new technologies that these SMEs can use to sort of continue to thrive, or at least be able to survive this whole pandemic and lockdown situation. And we use that to lay into our risk assessment and due diligence approach.
So Kah Meng, how does technology then play in this? Because essentially one of the key things is your risk management.
Yep.
How has technology played in reducing your default rates, and what are your default rates right now?
So our default rates is 3% for Malaysia, and that has been quite stable over time. What we have done is that during the whole pandemic situation, the different lockdowns, we have implemented and we have offered deferment programs to help SMEs to manage their cash flows better. And I think the positive sign coming out of that was basically a lot of the SMEs have been able to continue making the repayments after the deferment period was over. So I think that has been a big success for us. I think in terms of your question around technology, I think that has been a key piece. So in terms of SMEs adopting new technologies, being able to develop a digital footprint, a set of track record that they're able to demonstrate to us that they can survive and thrive and pivot their business model in this current environment. And I think that has been a core part in terms of our ability to do the due diligence and the risk assessment part on the SMEs. I think the other piece, going back to our earlier conversation at the beginning, was it's all about cost. So technology, as a result, is a key piece to minimizing the cost component. So the ability to come to us, the ability to request for financing, the ability to engage with us through digital means really reduces the cost of the outreach and acquisition, and hence make this a segment that is sort of scalable and sustainable that we serve over the long term.
Now, Kah Meng, if I'm an investor,
yeah,
why should I invest in funding society clients? What's the advantage to me? I've got a lot of investment options out there.
Yeah. So we should not be the only investment or asset class that you invest into. Always think of it from a portfolio perspective. So you still have your fixed deposits, you still have your unit trusts, your stocks, your bonds, etc. And I think we fit into one of the categories of the asset classes. And I think the value proposition that we bring is basically that we are much less correlated compared to some of the more traditional asset classes like stocks and bonds, for example. And a very clear example is it doesn't matter what happens to the S&P 500, it doesn't matter what happens to SGX, it doesn't matter what happens to KLSE. The guy who's selling or buying and selling used cars, as long as there's still people needing to buy used cars, they'll still be operating. They'll still need funds to buy inventory and sell inventory. Yeah. So that piece, there will be the added benefit of being able to diversify your overall portfolio with less correlated, market correlated assets. I think that's one of the strongest value proposition. I think the other is basically in terms of the short-term nature of our financing. So with a lot of the investment products out there, you generally have to stay in the market for a period of time, in years, in order to make up for your entry fees, your exit fees, and basically your margins on an annual basis. So I think for us is the shorter term tenor, and that the fees are really tied towards a success basis whenever repayments come back. And hence that's where the service fees that we charge comes in. So there's no buying fees. No,
and so give us an idea of your service fees and also what sort of returns I can get as an investor.
So net of service fees, the expected return for investors that we manage investors' expectation is basically in the high single digits. So whether it is 10% or whether it's 5% depends on your risk appetite. So we also have an investment product on the platform whereby we through our associate company actually guarantee the principal and returns. So that is for a lower risk appetite investor. But obviously, there are also products that there is no guarantee that carries a higher interest return. But overall, the expected returns that we manage investors to is basically high single digits, which is after service fees, which varies by product. Generally speaking, it's going to be around 15% of interest, which is only collected when the interest and principal repayments are being repaid. So if you don't get any repayments and for whatever reason it goes default or delinquent after a while, then there is also no service fees that we charge on outstanding.
Okay, and you guaranteed, I'm assuming that you are able to guarantee the certain return by reinsuring the risk.
So we are guaranteeing the risk, and the reason is because we are able to do so is we are able to build up a diversified portfolio of SMEs that we serve.
Okay.
And at the same time, also from the track record that we've been able to sort of establish over the last almost 3 years being in the market, and that gives us the ability to guarantee this in a way that.
So your guarantee is a guarantee from the organization. It's a self-insured risk guarantee.
So the guarantee is offered by an associate company of ours.
Okay.
Yep.
Okay. Now, the P2P lending landscape has changed quite dramatically since the initial 6 players like you got your licenses. Give us a perspective of how it's evolved and how do you think it's going to evolve moving forward?
Yeah. So I think we started off with 6 players in the market. I think back in 2016 when it was awarded, and I think fast forward to today, I think there is 5 more that's being awarded around 2 years ago. So I think there's definitely more players, but I think the whole COVID situation has actually slowed down some of the development from most of the players. And I think because of the uncertainty and basically there's no track record in this space during a pandemic, I think we've been quite fortunate to be sort of started much earlier on and be able to sort of test our credit models to validate and to verify the robustness of the models during this period. So I think definitely the number of players in the market has increased over time. But I think in terms of how quickly they're ramped up as well, that has slowed because of the pandemic itself. I think overall wise, I think if you look at the size of the SME financing gap, it's estimated to be around $20 billion in Malaysia alone. And I think for us, we have dispersed around $200-ish million in Malaysia alone by funding sizes. So I think that is basically just scratching the surface in terms of meeting this financing gap. So there's a long way further to go. I think with new players and more players, I think it does help to expand the pie in terms of creating more awareness and credibility to the market. If you're only the only player and the only operator in the market, then obviously then it becomes a bit less credible, right? So if you have many players that's regulated, that's licensed, and so on and so forth, then it helps to expand the pie as well. But I do think that one thing that I did notice is that a lot more players are more focused on the Klang Valley area and places like Penang and Johor. And I think the direction going forward is that are we able to expand beyond these main city areas? So West Coast, West Malaysia, and so on and so forth. I think that's where the interesting parts would be for Malaysia.
And any final thoughts you'd like to leave coming before we end the conversation?
Yeah. So I think for us, we are still very much at the beginning stages of what we are able to deliver and to help serve the needs of SMEs in Malaysia. So I think for us is that we want to encourage and we want to reach out to more SMEs, whether through partnerships, right? So some of the well-known partnerships in Malaysia like Lazada, Panda, and the like, working with them and reaching out to more SMEs, and also helping these partners to grow their own platforms and grow their ecosystems. Likewise, working with corporates and anchor partners to be able to serve their SMEs within their ecosystem, whether it's giving them their customers access to financing to buy more from them, for example. So these are the areas that we'll be very keen to look into. And I think if there's anyone in the audience that might see a value add from this sort of proposition for your customers or for your suppliers, then feel free to reach out definitely. And if you're an SME who's looking for financing, I think feel free to just reach out to us on our website. It's very simple to sort of log on to apply and get the disbursement that you need, financing that you need.
Kah Meng, thank you very much. It's been a fascinating conversation, and thanks for coming on the show.
Well, thanks a lot for having me, Brian. It's been a pleasure.
Now, I'm Brian Fernandez, and I've been speaking to Wong Kah Meng, the CEO and co-founder of Funding Societies Malaysia, on Biztech SME Show. This video will be on our various platforms as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks again for tuning in.